Hi, my dear Ozbuzzers. Well, we are a buzz. The world is a buzz with conflicting news, reports, statistics, opinions on YouTube, etc., etc. And certainly you have been busy writing me questions. And a lot of you, of course, several hundred attended our last Thursday's Zoom meeting. And now we have well over 150 people wanting a copy of that. Which we're not really going to do. Our job is to have a blog and chat and share opinion with you rather than have a multitude of specifics to deal with. But what we thought this month, because people want a copy of last week's Zoom, it gives you a little bit of a summary, and also to help with the 184 questions that we cannot answer anymore, just simply too much. We're going to put this out as a Zoom rather than our usual text, but we'll leave the text for those of you that are numbers oriented and leave you the astounding numbers in text as well as on the slideshow. And then we will also ask you some help. How do you like us to proceed? Do you want to continue in the text version? Do you like this kind of environment where we just chat? Or do you join me on YouTube for the Q&A? That seems to be growing quite substantially, and we leave the Q&A out of the Ozbuzz altogether. Anyways, we need your help, so when you do get the survey, take 2 minutes. There's 22 questions, essentially the yes or no questions, and it really would help us to see how we would continue, or whether we would continue. Okay, let me put up my slideshow, and let's go as usual. That we have to be clear that we are just sharing opinion, that we fully expect that, and I write that in every Ozbuzz, that if you respond to any posting or opinion, etc., we fully expect you to get independent legal, tax, and investment or mortgage advice, as the case may be. We are just chatting, we're just sharing you the opinions that we have about the world, and hopefully make them understanding to you in a format that you enjoy. Okay, so needless to say, this was not November 10. One of the things that didn't change. It is now November the 15th. But you know, we always talk about, and at Land Rush we talked about that we always look at the past year, what a terrible year it was, or what a great year it was, or surprising years it was. Well, this one we talk about this month, and England was near collapse in its financial system. It had to fire the Prime Minister, the Treasurer, the Finance Minister. The food inflation was 14.8%, and this morning England was reporting an 11.2% overall inflation rate because of soaring energy prices, but 11.2%. It is now where I think it has been for a while, and where we probably are in Canada, really, when I come back to talk about inflation. So 11% in Europe, 8% in the US. It came down a minute amount, but food inflation is higher. The producer price inflation in Germany is a whopping 25%. It's better in the United States now, but the thing is, we're in a world where stocks can bounce 500 points up or down in an hour. You know, and the wildness continues. The credit card debt is 930 billion. We have the fastest rising interest rates in history, particularly as we go into a recession. Normally, the banks would help us in a recession and bring rates down. We have the mortgage demand now the lowest since 1997. That's in the United States and in Canada. Bond markets are on track for a bad year. The tech stocks are trading like it's 2001. And when you look at the layoffs, we are talking always that the layoffs aren't really there, but Twitter, 50%, Cameo, 25%, Snapchat, Coinbase, Opendoor. Yesterday, Amazon announced a 10,000 people layoff. Apple has a hiring freeze. Meta is apparently at 14,000. And so clearly, forecasting is never easy, particularly when it's about the future, right? And particularly this future, you know. You look at Canada housing market is headed for historic correction, says RBC, worse than anything that you've seen in 40 years. The TD sees a 25% price decline by the first quarter, and Terranet says the largest monthly decline on record, and that was August to September. The point is, we're getting scared. I mean, we had a FOMO, fear of missing out, on the way up. and we jumped into the market, and now we are scared on the way down. We want to get out of the market. And so let's just, whoa, hold your horses. If you're a homeowner and you bought a home for yourself and your family, what's changed? Nothing really, as long as you did what we suggested is, and that is lock in your mortgage rate to the length of time that you wish to have the property, then you should be fine. And if you need to sell, of course, then understand 50% of the properties are still selling. You've got to get your property in the ones that do sell. You know, forget about the ones that don't sell. But when you put the property in the one that sell, then you have to also be realistic on the price. Yesterday's price is gone for a while. It probably will be back in a few years, but right now it isn't. If you're a buyer, man, it's your time, baby. It's what you wanted and asked for the last 3 years, right? Realtors have time. Owners are reasonable. You can check things out. Now, the other thing, of course, what is kind of disconcerting is that we had Credit Suisse last week offer a 9% bond. I mean, we're talking about a major worldwide bank that's offering a 9% bond. That would scare me to put money into Credit Suisse, actually, offering me that kind of an interest rate. But the other things that are really troubling is that the Canadian real estate lender Romspen Investing has halted redemptions on its largest fund, because a number of borrowers stopped making payments, number one, and so temporarily they defer payment of redemption until it has more clarity. That's in a press release. Well, that would mean that you're an investment in this fund, or an investment in any private mortgage funds, or any MIC, that redemption will, you know, accelerate as things get worse. And so if you're in there, understand that, and maybe you should readjust your investment position. British pension funds are on a renewed attack, and we talked earlier about inflation in Britain. And then, of course, we have the crazy crypto world. First, we have 3 arrows, then we have Luna, then we have Celsius, and now FTX, which is the second largest exchange, or was, and had a great presentation, crashed and burned 8 billion, and the total outfall might be a loss of 80 billion. And so no one really should believe anything that anybody says. But as a side note, we've got to understand, when we as investors, we are now safe in our funds, we invest in mortgage funds, we invest in not in stocks necessarily, but companies that invest in stocks. And here we have the Ontario Teachers Pension Fund put 420 million into FTX. It's gone. Now it's a huge corporation, and it won't hurt them that much. But in reality is that all of these losses in the crypto space have been done probably by the millennials. You know, the 25 to 45-year crowd got hurt. It wasn't all the big boys, but some big boys, like we have our famous movie star Kevin O'Leary, that admitted that he had put large amounts of money into FTX, supported FTX, just like Brady, the football star. Also, all of these stars had been in this crypto space, unregulated, unprotected, with your money. Let's face it, the Ontario Teachers Pension Fund is Ontario teachers' money that has been lost. And so take a look at where you have your money in a much smaller sense, and seeing what are these companies investing in that you're there. Now, our politicians say, don't worry, we'll be okay. And to some extent, I agree with them. This is a slide I put out probably I started it in 2005 and then finished it somewhere around 2010. But actually, the stock market, after every crisis, recovered relatively quickly. In the Korean War, the stock price dropped 12% in one day. And a year later, it was up 28%, and then 2 years later, 39%. And then in the Cuban Missile Crisis, stocks 2 years later were up 57%. When Kennedy was assassinated, stocks were down 8% and then soared 33% higher. In the oil crisis in 1979 and 80, you know, prices were higher a year later. And whether it was the invasion of Grenada or bombing of Libya, the Great Persian Gulf War, and you can see down 5%, 1 month later down still 15%, or starting to come up, but a year or two later up 25% on average, or 37% on average. And even the crisis at 9/11, where the Dow Jones average closed for 4 days, we were down 14.6% on the day, 9% a month later, and 2 years later we were out. Now, I don't have to go and show you the charts from 2008 and 2009. You know what happened through all of these smaller events, like even 2015 and 2016. We came through it. We somehow muddled through. And so when we look at our Bank of Canada that raises the policy rate to 3.75% for the first time since early 2008, you feel like running for the hills. I mean, I don't blame you. I mean, you know, hey, this is, you know, it is not the rate that is worrying me. I mean, I've done most of my real estate investment at 10% and 12%. I mean, I was the president of Royal LePage and stood on national TV and says 12% is a good rate for the family. I mean, and it was, you know, at the time. What's worrying me now is not the rate itself. It is the speed with which the rate has been increased, and I've been writing about that for a while. So the central bank said that the interest rate will likely need to go further. But ladies and gentlemen, what I'm seeing is that the bank blinked. This is a sign. I mean, they were supposed to go up for 75%. The banks were ready to hear it. Financial officers, forecasters, YouTubers, everybody expected a 3/4% price rate increase. And also unemployment is low, jobs are record high. So why do I have to do it? Why only go a half? So I believe when it didn't do the pre-told 0.75, to my mind, they were scared. Because when you take a look at what happened in England, out of the blue, like a black swan that nobody expected, there's tons of derivatives that we have in the world. At any one time, one of those things could happen and a crisis could develop. And the bank certainly doesn't want to be the one precipitating that crisis. So I think they've decided to slow down. Right now, our prime is at 5.95%. So a buyer that had a $100,000 down 10 months ago, he was able to get a $652,000 mortgage. Today, he gets $505,000. Quite a big change in his ability to buy a house. The best 5-year term now is about 5.79%, and it varies, of course, depending on whether you just had your TV repossessed or not. But a $700,000 mortgage in February, your payment was $2,700 at 2.5%. A $700,000 mortgage at 5.79 today is $4,000, and that's if you get the best rate. So we have a $1,300 increase in a monthly payment. The stress test now is all around 8%, which again all of this takes buyers out of the market. And so what will the bank do? Well, our take is that it's possible they go another 3/4%, but not likely. I mean, likely, actually, we thought it might be around 0.5%, but I'm starting to think that they may go as low just a quarter and then one more quarter, and that's it. You know, they're seeing that they have done what they wanted to do, is like hit us over the head with a fence post and get our awareness that they mean business. And the other thing is that a lot of people think that the pivot, and we wrote about it in the last newsletter, people think a pivot means that we're now going down. No. The bank wants to get an equilibrium of the high rate that they feel will work on inflation and then stay there, maybe for a year or two or longer, right? So that we get used to the idea of that 7% range, you know. So we have been already correcting, says the market. We are getting closer. And in terms of the prices, you know, we still have seen a fairly sharp downturn, but I see prices plateauing perhaps, particularly downtown Vancouver, and I'll come back to that in a minute. However, if the bank decides to go up another 1%, all bets are off and real estate will be in even more trouble. I have my picture annoyingly in the corners. Get down there. So the Federal Reserve raised its interest rates for the 6th time, and it's the 4th consecutive 3/4 price increase, percentage increase. And of course, it's just like in Vancouver and in Canada, everything is going up dramatically. The equity lines of credit are at the highest in 14 years. Car loan rates are 11-year high. And the whole idea of the home equity loans, I've never liked them. I talked against them on the radio many years, that I felt it makes us feel that we have an unlimited credit card and people are into those lines. And now then the trigger point comes, trigger point meaning that, you know, even if you have a variable rate with a fixed payment, at the trigger point, that catches you, you're now into only paying interest, the bank says, no, you're over 80% or whatever the rate is, and that triggers a much higher payment. And as they clock in, that'll be uncomfortable for a lot of poor Canadians. And so, you know, the US monthly payment, of course, generally it's lower, right? Because they have, the average price is around $450,000 throughout the United States. And so a 30-year rate at 3% would have meant a monthly payment at $1,283. Now at 7%, because in the US it just soared straight up, it's also some almost $9,000 more per year. So it's interesting thing is that the increase in mortgage rates since the start of 2022 has the same impact in the United States on affordability as a 35% increase in home prices. So that shows how dramatic that is. So the winner, of course, is the saver. Finally, the saver gets some money on their accounts. They're seeing their best deals, and so cash all of a sudden is not trash. You know, as we talked about all last year when Ray Dalio said cash is trash, and people saying get out of cash. I cannot tell you, several people have written me that they're glad that they went half of their money was in cash last summer. And while they're in one particular case, the writer says, right through towards the end of the year, I was grumbling about Ozzie Jurock telling me to be in my cash. And then since then, I sing praises of Ozzie Jurock. Yeah, when the stock market goes up and I tell you to be in cash, that's not too happy. The opposite is true, of course, as well. Okay, here we have our Canadian David Rosenberg. Of course, he's a perma-bear. But he made an interesting point that the Fed in the United States is keen to hammer the economy and risk assets and tighten into a flat yield curve, and we haven't yet seen all the bad stuff hit the wall. And so he says that Powell knows the economy is weak, he knows inflation is a lagging indicator, right? And the inflation that he really wants is to destroy equities and real estate assets. That is according to David Rosenberg. And he said that even in 2018, Mr. Powell, who was then in charge as well, he wanted to do that. But that time, he had Donald Trump was getting in his way, whereas now Joe Biden giving him the nod. So according to Rosenberg, there's a lot of pain ahead. Be that as it may, what we have is confusion, right? Jim Rickards sees deflation. Peter Schiff, also a YouTube specialist and long-time bears, they see dramatic deflation ahead. And Ray Dalio says get out of dollars. Michael Burry, who forecast a mortgage crisis, sees hyperinflation. By the way, yesterday he came out and he has a new series of stocks. Everything he is doing is selling short. Okay, what does that mean? Well, let's go back to basis. Look, real estate is 40% bigger than all the world equities and bond markets together. Our real estate is the biggest asset class in the world. And so the global market value was some 326 trillion, 40% bigger than the global bond and equity markets combined. So we can be resting assured that in Canada and the G7, we also are really dramatically have benefited. We have a leading home price appreciation, maybe not too surprising that we now are taking a breather. So it has been good. Now it's going down. Biggest question I get, when is it over? And of course people saying, Ozzie, do you think it's over in the spring? I say, I know exactly the date. It's March the 8th at 6 o'clock. Nobody knows, right, when it's going to be over. I do believe that inflation is here to stay, and we can certainly look at my chart. This slide is something like 20 years old at every one of my shows, and these are my basic philosophy, that macro perspective is, are we in inflation or deflation ahead? What's the timing? And that is the real question right now. What is the trend in the marketplace? What are the cycles? And of course, inward migration, demand and supply, and interest rates, all that makes a point. And we always claim that you make the most money on the day you buy. And that's particularly true in this kind of environment. We have held a multi-year position. JREI stands for Jurock Real Estate Insider. That was my newsletter from 1993 to 2017, which was a paid subscription, which I stopped because it forced me to do it every week. But we held the position that hard assets are inflation worldwide, period. And it's a direct relationship to how much money we're printing, and we quoted Milton Friedman extensively that inflation is primarily a monetary phenomena. And that hasn't changed. I put it in every one of my books that you know you had to, whether it was the first book, forget about location, location, location. I made the point that timing was everything, and watching what inflation is doing based on how much money was being printed, that's all you had to do. And I said that if we kept on printing money for the next 35 years from 1998 to at the same rate that we increased it from 1963 to 1998, we went from 13,000 to 278. I used that same percentage increase and extrapolated every house in Vancouver to be worth 5 million by 2033. Interestingly enough, last year the West Side clocked in at 4.4 million, but in 1998 everybody thought I was some sort of a lunatic. But the reason on inflation it's so confusing is this Professor Steve Hanke, who used to work, he and his partner used to work for Margaret Thatcher's government. He has a great website, and of course he is an aficionado of Mr. Milton Friedman as well. But he puts out an interesting, called Inflation Dashboard, and this is about a week old. And he says the government on the right-hand side says one thing, but in reality it's another. So in Turkey they're already owning up to an 85% inflation rate, but according to him it's actually 108%. And places like Malawi say it's 25%, but it's really 47%. Or South Africa says it's 7.5%, but it's really 30%. And what you got to figure out, the US and Canada recorded inflation under 8% or under 7%. Is that the real rate of inflation? Of course, you know my view. Go to shadowstats.com and take a look at what is in the Volcker basket of goods and services that were measured in the 80s when the interest rates hit 16 to 20%, depending on what you were buying and selling, and whether or not the things that we have now in the basket are really compare. Of course, in our view, they don't. A lot of the stuff has been taken out. Okay, so you can rest assured, I believe that inflation is a given. It always has been and always will be. And the reason is, in my view, that these numbers are so large. You know, you say always to your kids, I told you a million times to shut up. Well, no, you didn't. I mean, sometimes they say, I told you a billion times to shut up. No, you didn't. I mean, it would take you a hell of a long time to say a million times shut up, right? But never mind, a trillion is an outlandish number. It's a million. It's a 1 followed by 12 zeros. So $1 trillion would buy you more than 1 million Canadian homes at an average price of $1 million, right? If you had the cash, you could spend $1 million a day for 3,000 years, okay? So you get the point. And we owe the world some 300 trillion. It's never going to be paid back, never. If you look at the U.S. Consumer Price Index for October, it's now down 0.4%, but still up 7.7%. And the stock market goes nuts. I mean, the stock market goes nuts on any kind of good news. It also goes down on any kind of news. God, thank you that I'm not in the stock market, and I'm just not a stock market aficionado. This daily ups and downs would kill me. But the thing is, the whole world now thinks this is wonderful. Well, this is, as David Rosenberg said, it's a lagging indicator for one thing. So a lot of the stuff may not come until later on this year or early in the first quarter, but it's slowed down from the 8.2%, and it justified a 1,200 point jump in the Dow. Really, I think that's it's not good. Our view is that inflation will finish the year somewhere between 6.5% to 9%, and next year it will be over 5% as well. Canadian inflation rate just yesterday came out, and it's now up 6.9%. It's about the same as it was, and again, looking at the pundits, that seems to be a wonderful kind of a thing. Certainly it's wonderful if you compare it to the United Kingdom, where it's now an admitted 11%, and remember, that's what they admit to. We don't know what it really is in the future. Okay, so inflation is wild. Higher inflation is going to be the outcome. We print the money out of thin air, we'll make it available, and it results in higher real estate prices. I have seen never so much cash around. Corporations and individuals are gushing cash. We have lots of money available constantly where people want to earn 5 or 6%, and you know, literally tons of it. So that is all inflationary eventually. And so my point is that short term, the major correction will continue. Real estate is going to be down to sideways for maybe 1, 2 years or longer, right? So, but long-term inflation will become higher again, and higher real estate prices will be the outcome. And yes, the prices that we no longer can get from, say, 6 months ago, eventually we'll be paying again if we kick the can down the road as we always have. The big question remains timing. I said in September in our newsletter that 4 ugly months are ahead. They still are ahead. You know, I was looking at the banks, of course, that also going to make another prediction the end of this month, and in the United States in the first week of December. And again, it looks, you know, if Canada goes up only a quarter, you can go and comfortably take a good hard look at the markets again. I think it'll be over the fast increase in increases. If it's a half or 0.75%, roll up into a little ball of fear and stay in bed on top of your cash that you put in the mattress. Okay, so investors, of course, hate uncertainty. Well, everybody hates it, but we have to face the truth because nobody really knows. And I don't care who your guru is. Nobody knows. I have access to some very fine, very knowledgeable people in Europe, in particular my old school pal who is now second in command in a very large bank. You know, they are, you know, they're getting numbers that they can't believe. It's just mind-boggling right now what goes on in Germany. I mean, here we have Germany, you know, buying the largest gas company, buying it, naturalizing it, reopening coal plants, and now looking at you know, nuclear energy again. And so the truth is that when it gets very cold, you know, we're going to do a lot of other things to do, and the massive inflation will be the outcome. I said to you to please subscribe to my youtube.com, that's Jurock Video, youtube.com at Jurock Video. Make sure that you get the right kind of videos. You know, I have about 1,500 subscribers. Click on the like button and the bell button, and then you get a notification if I put up a new one. I don't put up that many. It doesn't bother you that much, but take a good hard look and see whether you like what we do there. Okay, the numbers are important, but before we get to the numbers, there's 4 things coming. One is the home buyer rescission period. There's a mandatory 3-day period that will give home buyers an opportunity to get out of the deal, right? And the idea is that the government of BC insisted on, this is a British Columbia thing, that buyers have been given this opportunity. And of course, they were worried about what happened in the last 2 years. This is really the proverbial horse has escaped and the barn door now is being closed. But an interesting twist is that to stop the person going around and make 10 offers and then walk out or cancel all of them, there is a cancellation fee of 0.25% of the price. So for every 100,000, it costs them $250. $1 million home, for instance, if he walks, it'll cost him $2,500. Now for realtors, if you aid or abet into this non-3-day award, you will be penalized as well. The other one is the prohibition on the purchase of residential property by non-Canadians. You know it's coming. It's now law as of January 1 for 2 years. And you can be fined if you do knowingly sell somebody something that's not legal. You can be fined $10,000 and the property can be forced to be sold. Now remember that, for instance, in Whistler, I keep getting questions. I don't have the answers. Nobody has the answers. A very good lawyer, Spagnolo, was telling me the other day and in his newsletter that, you know, they're waiting to get instructions on, because there is an exemption which is recreational property. Does Whistler qualify? We don't think so. Canmore doesn't think so. But you have to wait for it to be done. In the meantime, your foreigner that you want to sell stuff to, he can buy commercial and industrial real estate, no problem. And if you want more information, go to the very good story on the law firm of Fasken under marketing.communications@fasken.com. There's also such a thing as a Landowners Transparency Act and registry, and that is now effective November 30th. Now, we didn't think about it much because it came in 2020. They gave us an extension to this November, so this is it. So the idea is they want to end hidden ownership. So if you have a direct ownership but don't have a meaningful relationship or indirect ownership in land, you must declare. You must declare, and the fine can be 50,000 or 5% of the property value. It's important that you do that. And then finally, the Residential Property Flipping Act. Again, the details are skimpy, but that's part of the budget, part of the election promise. And the idea is that gains that arise from certain dispositions of residential property that you own for less than 12 months will now be taxed as business income. Now, this tax, including the extension for assignment sales, will apply in respect to all transactions from January 1 on. Now, this is kind of interesting. It means really that now if I'm an owner and I buy it for my own use, I now have to pay taxes. I thought my profit would have been exempt, you know, under the capital gains exemption. Well, it is no longer capital gains even, you know. I mean, let's face it, that even the flippers before, they always paid capital gains tax. If I flipped a property and I tied it up at $1 million and flipped it at $1.2 million, I had to declare the $200,000 and pay capital gains tax. That's never changed. It's like people saying that people didn't do that. If they didn't do that, they were criminals and they should be sued, and some of them are. And so the point is that the interesting thing to me is that that's for 12 months. So saying it's only for a year. But what if they make it 2 years or 3 years or 5 years? And that would be a great way to get away from the capital gains tax exemption for your private residence, right? So watch it. So the whole idea of timing and psychology in the market is when you take a look in February 2021, the average price in Vancouver for a house was $1.8 million. By October, it was $2 million. By February this year, it was $2.3 million. And now it's back down to $2 million. So we're down, you know, about $245,000 or 11 or 12% since then. Now, when you take a look at our overall price, you can see we started in 1977 down here in the 70,000 range. By last February 2021, as I pointed out, it was $1.8 million. But look at all these ups and downs, depending on when you bought, the timing in 2014, or whether you had bought at the top of 2016, saw it go back down in 2017. You know, the whole idea is that timing is important, and that's why I look at the numbers, because the numbers tell me what's happening every single month, and we're using we are using the average numbers, and I take a lot of flack on it, but we take average numbers for detached homes, the used sales only. We take out the new sales, because 80% of most sales are in the used area. That's thousands of units, and the average price does work. And I don't want to debate this here, but I don't believe into benchmark prices or median prices. They all have pluses and minuses. For us, this is something been done for 25 years. And it gives us, and even you look at the BC Real Estate Association uses average prices. This is a slide from the board. And so the key is for you as an investor, you want to know, yes, what did it mean last year to this year, and maybe this year to 4 years ago? Yes, you want to have an idea, but what you really want to know is what's going on in the market right now. And one of the best slides, what happens for British Columbia, is what the BC Real Estate Association puts out every month. And the October slide goes right down from the Fraser Valley to Vancouver Island. And you can see the Fraser Valley is down 8% in average price and 53% in sales. Okay, you can know that, but that's October over October. Nobody lies, everybody tells the truth. Greater Vancouver is up maybe 1% in price, and then unit sales. Now this number, that 1.2, is actually condos and houses together, so we separate them, and then we look at it also from this February. So the total of 5,200 sales clocked in was a 46% reduction from last October. The average price was 932,000, which is actually a 3% decrease of the 963 quoted last year. And so you have real fine information at the BC Real Estate Association. That is a great slide. I study it. If I want to drill down in the Kootenays, for instance, to get an idea, and then I can see what's happening. But the price declines year over year in the last 6 months are now fairly dramatic. The average price we should mention that the average price in August had dropped to $1,990,000. And then went back up to $2,001,000 in October. So So we show you the real market conditions for the last 6 months, and then we show you the additional review for the last 4 years. So the best thing to look at is this year against 2019. That was pre-COVID. 2020 is really nothing to compare, but the whole idea is you get a good idea of where the market conditions are. So if you look at Vancouver detached homes in this March, we sold 1,300. In October, we sold 585. That's a 55% decline. Condos are down 57%. On the price, the average price was 2.3 million in February, 2 million in October. It's down 12%. In April, the condos were 846. Now they're 769. It's down 11%. And in the Fraser Valley, we had sales in March of 1,547. Now we have 327 in single-family homes. That's a whopping 79% decline, and the condos are down some 66%. Under the Fraser Valley detached price, we were $1.9 million in February and $1.4 million. It's a 24% decline for single-family homes, a 17% decline in condos. Now you say, well, this is so much different than what I read in the paper. Yes, nobody lies. It's simply you use what numbers you use. You use last October versus this October. That gives you one number. But this, I look at what was the high this year, and then I follow it. I mean, it didn't go from 1 million, it stayed 1 million for 6 months and then dropped to 1.4 million. No, it went 1.9 million, then 1.850 million, then 1.7 million, then every month, and I reported that to you. So you got a very clear idea. I have several people told me that by April they started to sell, including myself. So the point is, you know, if you're looking at the numbers, we used to pick the March 2021 high of 1,972 sales and measure that against, say, the 585. But I got so much flack from you. I mean, so much. But I had 17 people saying it's just not fair to compare March to October in terms of the high. But on a monthly basis, just to find out what the market conditions are, I should stay in the year. And so that's what we did this year. So then the 4-year high, as I mentioned to you, that's what you find here, October 22, 21, 2020, 2019. Sales in single-family homes in Vancouver were down 47%. The price is reported at about 1% higher, as I mentioned to you. And it's certainly substantially higher than it was in 2019. Now here's an interesting thing. The active listings are now actually up. It's 12% higher, and they're not yet anywhere near where they were in 2019, but it is. We always argued in the last few months that active listings were still lower, new listings were lower. And so when you look at condo, active listings are barely just a percent higher, and new listings are still 6% down. So the condo market is, even though it's fewer sales, it is substantially better performing than the single-family home market. Now, when you take a look at the sales, at 996 sales in condos, it was 1,387 sales in 2019. So it was substantially lower, and the 10-year average is substantially lower. So, right, if you look at the Fraser Valley, sales are down 58% in single-family, 50% in condos, and the official number, October, its price in a single-family home down is 8%. But it's still substantially higher than it was in October 2019, as is the whole experience in the condo sector. But take a look at the active listings. In the Fraser Valley, they're now 47% higher in houses and 54% higher in condos. Now, it's still not as high as the numbers were in 2019, but you can see there's a trend to lower volumes, of course, and higher listings, and it usually results in lower prices. Okay, so we said on February 9, our headline, that the high is in place, and for the last 6 months we pointed that to a changing market. That was really before the interest rates changes really clocked in, and the stock market and crypto crashes all came afterwards. So the very fast increase in rates is starting to bite. It's really there. Now, on the bright side, Cam Good, who is the CEO of Key Marketing, in Ozbuzz about 10 days ago, they announced that a brand new condo development, First and Royal, sold 136 units during the launch. And he figures that this is days after the 6th interest rate hike in Canada. So maybe he says the interest rate hikes have worked, and he figures it's a huge vote of confidence for Ozbuzz. By the way, I would agree with him there. I think Ozbuzz is a sleeper. No question about it. New Westminster is in some areas lower priced than Surrey, and it's still this side of the river. So is it over? I don't think so. We still have to look at the interest rate that coming in December and a whole slew of influences that we have, but clearly it is an interesting achievement, and of course Cam Good and Key Marketing is a great company, but still that is a good result. Now when you briefly look at Calgary, single family homes are down, but condo sales are actually up 21% and the active listings are down 27%. So you can see that what's happening in Alberta is somewhat different, and the reason for that is that Alberta has the largest net population gain since 2014. Just in the second quarter, some 10,000 people relocated there, so if that was annualized, that'd be a huge number. And so StatsCan says Alberta was the leading destination from Ontario, BC, Saskatchewan, and the Yukon, and the reason would be housing and jobs. You know, values go where people go. I mean, the province has no property transfer tax, no provincial sales tax. Gas is $1.49. They have $22 billion in farm operating revenues. They have 80% of Canada's oil production, and so on and so on. And they have $4.3 billion of renewable energy projects that have been announced. Now, when you look at these sales tax and other tax bottom, this is what you pay more than the Albertans pay. In Newfoundland, it's 28%. BC, they pay 20% more tax in BC than they do in Alberta, and it comes from personal and corporate income tax, sales tax, fuel tax, carbon charges, tobacco tax, health premium, payroll tax, liquor tax, land transfer tax, and other minor taxes. And so some people say, hey, let's buy those snow boots and move there. But Keaton Kirkwood is a mortgage broker, and he showed me this wonderful little house. Now I ask you, my dear British Columbian and Vancouver or Ontario customers, or for that matter Phoenix. You know, we have a whole bunch of people from Phoenix and California at the meeting that we had last week. And so wherever you are, what do you think a two-bedroom unit with one bathroom would be worth in this building? Well, in Edmonton it's worth $54,900. Yeah, that was my eye-opener for me too. Imagine you take that, what you would have to pay in Vancouver, say $700,000, you could buy, well, 11 of them in Edmonton. And by the way, the rental that you receive in Edmonton is substantial. I own one-bedrooms and two-bedroom units. Now these are new units. On the one-bedroom side, we paid $170,000 for a brand new, very large, very beautiful, well-located unit. But the rental income is almost $1,600 a month, which is substantial. If you compare that against Vancouver, the return is much better. The other thing that you might want to look at, and this again comes from David Rosenberg's special report, he says that Saskatchewan has what the world needs: wheat, canola oil, potash, uranium. And the idea is that, you know, with the global community facing critical constraints, it certainly means that Saskatchewan could benefit, and you might want to take a look at that. So when you look at some ideas, only when and if you're sure and if you still have cash, look at Edmonton and Calgary cash flow. Look at Saskatchewan, particularly only in the big cities, and land, you know, acreages. Look at all farmland and for hold instead of stocks. If you want to buy long-term stocks, I would rather own long-term farmland. Buy in commercial and industrial if they have a use. You know, all real estate will always do well, as long, and particularly urban real estate will always have an increase in value as long as they have a use. This kind of a world, as a buyer, make stink bits, make lowball offers, but buy only the deal of a lifetime, and understand that the owner maybe sometimes doesn't know that if he carried a mortgage, he could transfer his capital gain over the term of the mortgage, so up to 5 years. So in other words, if you're buying a property, you're not sure about the financing, you're not sure, you don't like the interest rate either, but if you know the owner is going to make $1 million in profit and has to declare that this year, and you say, look, why don't you carry a mortgage and carry it at 4% for me for 5 years, and you can then declare the capital gain at $200,000 a year. He can sit down with a pen and figure out that he's probably better off giving you that mortgage than not. So do some thinking with your realtor and with your mortgage broker to you know, use this particular time to your benefit as a buyer. So far, the vendors always had the deal, but maybe now it's the buyers. So always take a look at assignments. That this is supposed to be a standby, not standbys, standby. Look at assignments. Look at assignments. There's a whole bunch of people that were greedy and had 4 or 5 units, can't close, and they might want to walk away from their deposit. Study the live workplaces and become an Amazon distributor. We talked about it many times in the past. Stay away from stuff that, until we're getting back to normal. REITs, we said, suffer actually an increased interest. It's them actually benefit from a lowering of interest kind of environment. All mixed and private mortgages will see increased draws from scared investors, and we talked about that earlier. And as you know, the one in Ontario stopped giving redemptions altogether. So if you need your cash and you're as a private investor in a fund, it might you to take a good hard look and see how financially solvent the fund is. And so stay out what you don't understand. I mean, stay out and run away from crypto. I get more questions on crypto than anything else, and people saying, is now time to go back in? Hell no! It is, to me, it is just unbelievable how unregulated these billions of dollars are, and it seems to be like outright fraud, and people still going back. It boggles the mind. So, and ask yourself where your money is, your investment fund, your pension funds, your any kind of a fund that you're in, what are they invested in? How much of their money was in places like FTX, and find out that the money is all gone. Luna, the money was all gone. Arrows 3 is all gone. Celsius, the money is all gone. So I mean, we're talking like gone. So if you invested in a feeling safe kind of a pension fund and they invest in this gambling kind of things, you're out of luck. So the troubles are, of course, when we look at rental accommodation, rentals.ca has great sort of, averages that they do. The average rent in October is now just under $2,000. That's the average in Canada. And the increase is almost 12%, which is, quite substantially higher than the official inflation rate. But if you look at Atlantic Canada, rates are up 32%. Ontario and BC and Alberta have seen 18, 15, and 13% respectively. So that is troubles ahead. And as a landlord, you really want to make sure that you can help people keep people happy that you are happy with. Layoffs are increasing, bankruptcies will follow, and mortgage trigger points, when they're reached, will put some people into a position where they have to sell. If you are in a position where you want to write offers, some basic things. I mean, ask for concessions on everything. I have sometimes bought a house with all furnishings from top to bottom. Particular garden furnitures, most owners don't want to take it with you, but ask for it. Bring your monthly payment bound, just like we said, get the owner to buy down the mortgage for several years. You can buy down the mortgages maybe as much, it's $25,000 or $50,000, which is just like the owner might give a price reduction, but this way he buys down the mortgage to you, so instead of 5.79, you maybe only have 4.79. Find a longer amortization, get the owner to carry a second mortgage, and as I mentioned earlier, the investment property owner could defer the capital gain. And if you look at all of that and you look around on a regular basis and you don't find a deal of a lifetime, say, so what, next? Walk away. We are investors, right? Investors mean we invest the opportunity. We invest, and if it doesn't match our requirement, we say, so what, next? There's always another opportunity. Now, in the United States, I've shown you that slides a long time. I was so, in 2010, I was so mad at people who felt stupid, that there were stupid people out there saying U.S. is not meeting its debt payment, that I pointed out that with this slide, the U.S. economy is a $21 trillion economy. They can pay their bills. They're innovative. They create stuff in the United States. So no matter what you might think about Americans, they are creating stuff. So $21 trillion economy. France's GDP fits into California, Canada is into Texas, and so on and so on. And so the point is that it's really important to notice that Canada's biggest trading partners, each state biggest export trading partner is in Canada. So we really want to be closer to the United States. We are now going from a globalization, which was the answer to all our problems. Let China make stuff, let Russia deliver the gas and grow the potatoes in Idaho and nowhere else. And so the point is that we now, with globalization, we're now getting deglobalization. Well, we are very lucky to be right next door to Canada, I mean to the United States. And so let's embrace them, let's go even closer to them, and enjoy the partnership, and don't be anti-American. We really need the Americans. But what we also need to understand is that Americans are leaving in droves. Okay, just hang on 1 second. I want to just make sure that I'm actually still... Yes, we are recording. For just one wild moment I felt that we weren't. So we're back. And the point I was trying to make earlier is that, you know, if you're investing in the United States, in New York, some 600,000 people have left. The crazy taxes and mad mayor cities, get away from them. The New York, Washington, Chicago, San Francisco, LA, San Luis, even St. Louis and even San Diego, people are leaving. And you want to go and invest where they're going. Values go where people go, and one of the best ways to go where people go, look at U-Haul statistics. It's kind of an interesting thing. You go myuhaulstory.com, and you can find, you know, it might cost you $5,000 for a trailer to go from LA to Texas, but it's only $1,200 from Texas to LA. Everybody is moving to Texas, and so move to Austin and Houston and Nashville and Phoenix, and certainly my partners and investors that have been made mainly in Arizona and Texas for that reason. It isn't just Tesla that went there, or you know, that Compaq, all of these different corporations go there with their thousands of employees. A lot of people are moving for the Sunshine States for lower taxes, much lower taxes, by the way, and much lower real estate prices. On the midterm elections, as of today, it's still not final, but it looks like the Republicans will get the House. And don't believe in polls anymore. In 2016, I wrote a story about why polls just don't mean anything, and I actually predicted that President Trump would win against all the polls that were out there. But the polling system is broken since we all have a cell phone now. It's different when you answer your phone as you're walking down a sidewalk and answer some polling question than if you have a landline. Who has still a landline left, right? So the undecided voters, all of that stuff that they tell us, it was a zoo as far as the forecasters were concerned, in my view. Now, if the Republicans win the House, and it looks like they might, but just barely, they will change the border laws. They'll take a sharper line with China. They continue the support of Ukraine, though, just like the Democrats. And they may just get even with the investigations of Donald Trump and investigate Biden's son, which has now been squashed, but that would be open. And there's a whole bunch of slew that the U.S. Will undergo. I personally think it's a good thing that not one has all of the power, and it's a good thing. That's the whole idea of a democracy. One is in power and a whole bunch of others are against them, and they're arguing, and you and I as voters can say who we would want to believe, but we have an understanding where everybody stands. So what do we hope for in the future? Well, negotiations, I think, will start in Ukraine. I don't think there will be a major extended war, although, you know, we just heard yesterday that a bomb by accident went into Poland. I'm absolutely convinced it would be an accident, but the whole idea that they just literally flatten every single city and the individuals, the people, that all they want to do is have a life, you know, and go to work, eat, drink, and be reasonably merry, and now here we have this literally killing and targeting civilians all across Ukraine. How Russia can look at itself in the face is beyond me. Now, the deglobalization means, as I said earlier, we should get even closer to the U.S., and we might allow us this whole shift into bringing work at home, might make a big difference. I know President Trump originally said to BMW, if you build a plant in Mexico, we're going to charge a 12% import duty, and promptly BMW built a plant in Alabama. And so there's a lot of that, rather than, oh, let's outsource it, let's do it at home. And that will have great opportunity for all of us. But to some extent, until we get there, our real estate markets are emotional and driven psychological. Unfortunately, I know that's what you don't want to hear, but it's the truth. The outcome is not clear. And I think that for most of us, staying on the sideline is a good thing until there's more clarity. The four ugly months are not over yet. Cash is still not trash. Now, we were going to do some more of that this month, but we put the whole deglobalization, inward migration into December. As you know, our goal is 1,300,000. It's now 500,000 a year, and we're going to talk about what that immigration number will mean, because 90% of those immigrants settle down in big cities, and so the Vancouver, the Toronto, and Edmonton, Calgary, the big cities, will benefit from that. We ask you, of course, kindly subscribe to our YouTube channel, youtube.com, Jurock video. And I remember, like we always said, live your life with energy and enthusiasm and empathy. You live in paradise. The whole world has thousands and thousands of people at our immigration offices. They want to be here. They want to come here. They want to have what we have. So we're already here. So we might as well enjoy it and live your life large. You know, we have so many choices that we have here, and we manage to complain a lot, but literally we live in paradise. No question about it. And I wish you a wonderful balance of November, and look forward to an exciting December and what's in store for us. Bye-bye.